And the rand falling to a fourth day on Thursday, and this is its lowest streak in 6 weeks to its weakest level since June. This is against the dollar at around 19 rand 20. The currency has since rebounded just below the 19 rand to the dollar mark. Let's speak now to Matete Thulare. He is with the foreign exchange execution at Rand Merchant Bank, and he speaks to us now about the markets update. And Mr. Thulare, thank you very much for your time. Let's quickly touch on the rand. It has strengthened against the US dollar, but what is driving this weakness?
Top of the morning, Claudia, and a happy Friday. I mean, yesterday the rand trading stronger. And yes, we failed again to clear above and stay above the 1915 level. We traded up until 1926 in the early morning session before the local exporters put a lid on the rand and we began unwinding these long dollar positions. Now, the unit finished the day down at around 1898 and it's firmly back in our current range. I mean, already we saw a higher than expected local PPI print for the month of August, which had a very little impact on the rand, and it took the number higher in its stride. I mean, today a lot of the market participants will look towards the local data out later this afternoon to get a gauge on where the local economy finds itself. Now, if you look across in Asia, I mean, earlier on this morning, currencies were marginally stronger against the dollar that took a breather and gave back some of the recent gains that it had made. Now, if you also look at the US Treasuries, that also traded slightly lower after a strong rally this week as the markets and investors await for US inflation later today. Now, on the back of that, yes, the Fed has been speaking about a hawkish tone and obviously higher rates for longer, and the fact that interest rate hikes are not over yet, and interest rates will remain elevated for longer than originally anticipated. Now, the rand this morning trading below 1890. We're firmly back in our range of 1875 to the 1915 range, and I think a break and close on either side is needed for new direction. Up until then and up until the release of the data, this is when it will give us some fresh direction.
Let's talk oil prices. They are set for a weekly gain of about 2% after regaining ground in early trade. Talk us through the factors, in your view, that are influencing trade there.
Yeah, look, I mean, the recent surge in crude prices really is posing a threat to the global macroeconomic stability. I mean, crude is approaching $100 a barrel. That's reviving the input cost pressures, which is a negative for growth, and also the pass-through effects to consumers would spur inflation and also reduce the purchasing power. Now, if you look at the likes of Saudi Arabia and Russia, I mean, they have raked in billions of dollars in extra oil revenues in the past couple of months. Now, this is despite them pumping fewer barrels, and after their production cuts have obviously sent the prices on a rally. Now, the cutbacks were a risky strategy, both from a financial perspective and also a political perspective, but it appears that these are paying off for the two most important members of OPEC. I mean, if you just look at what the price increases they are making for more than the reduction in the sales volumes. Now, if you look at just the oil revenue that Saudi Arabia has made in the past 3 months, it's about $13 million a day. Now, if you just equate that for the 3-month period, it would be about $2.6 billion. Now, if we also look at Russia, I mean, their oil revenues, that's likely up about $2.8 billion. That is quite significant. Now, these successes could prompt the OPEC cartel to consider even further restrictions to the global supply. And I think right now, if you look at it, OPEC is very much in the driver's seat, and you could argue that there could be more production cuts to come. If that happens, potentially it could push the oil price above $100 a barrel, which would obviously spur inflation globally. And I think this will be on a lot of global central bankers' minds.
Let's talk company news. Kibo Energy publishing its interim results for the 6 months, which ended on the 30th of June 2023. Make sense of their performance for us.
So for me, look, I mean, it's a robust project portfolio. I mean, that remains really comprehensive and diverse. I mean, the projects they're spanning in 4 areas. I mean, this is reserve power, the waste to energy, biofuel, and long duration energy storage. Now, I think this is a sector and infrastructure spend that is really still going to deliver some solid results. I mean, some of their strategy includes implementing the appropriate disposal and disinvestment of, hydrocarbon and coal-based power projects. We know that obviously these are some of the projects that we need in South Africa. But for me, the strategy to acquire and develop a portfolio of renewable energy assets, that is very paramount. And I think if you just also look at the optimization and some of the synthetic fuel from the non-recyclable plastic waste, that is quite a key significant project. For me, another thing that really stood out from their unaudited interim results is the fact that at this point in time, there's a JV with an investor consortium for about 5.9 billion pounds. I think that is really going to be quite critical, especially in the spaces that they play, but also the fact that they are looking at some projects out in Tanzania. They have signed a memorandum of understanding with some of their power projects. So for me, I think, look, the interim results looking decent, but at this point in time, for me, this is a long-term project, and I think they're still in for the long haul.
Let's conclude the conversation with SPAR's share price, which rallied yesterday after the group said it will pull the plug on its unprofitable investment in Poland. What's going on there?
Yeah, look, I mean, the SPAR Group, they have announced their intention to disinvest from their underperforming businesses out in Poland. Now, the board's determined that initiating a process to sell their holdings in Poland is in the best interest of their shareholders and also their group. Now, the decision comes after the group reported a significant 10.6 increase in turnover for the first 47 weeks of the financial year. Now, Poland has got about 187 stores. Now, it's seen the operating loss fall to about 58 million rand. But now, after acquiring the stake in 2019, I think SPAR did embark on a journey to revamp the business by attracting retail customers with improved discounts and closed some of their unprofitable stores there, and they expanded into new stores such as fuel forecourts. But now the group has also realized that this is actually not really the best interest of the group and also for the shareholders. Also adding to this is the fact that they've had a problematic rollout of their SAP IT system out in KZN. That has resulted in an estimated loss of turnover of around 1.4 billion for the past 47 weeks. So for them at this point in time, it looks like a consolidation of their business and obviously focusing at the heart of their South African business and still having some of their offshore interests. But look, I mean, like we've seen a lot of companies, they are disinvesting out in Eastern Europe. So it just looks like they're also following the same trend.
Matete Thulare, the head of foreign exchange execution at Rand Merchant Bank. Thank you very much for that markets update.